Welcome to the Multifamily Investor Nation podcast. I'm your host, Whitney Elkins Hutton, the Director of Investor Education here at PassiveInvesting.com. And I'm so excited to have Lee Yoder back with us on today's podcast. Lee, welcome back.
Yeah, thanks, Whitney. Thanks for having me. Excited to be here. Love this podcast.
Awesome. Well, hey, Lee, before we dive in to Elida 96 units in Elida, Ohio, I nailed it. By the way, tell us a little bit about yourself and how you got into multifamily investing and where you're at today.
Sure. Yeah. So we're located here in Ohio. I was a physical therapist by trade, got in with a kind of a startup company and was then not doing any physical therapy. I was kind of helping build a division with that company and discovered there that, well, at least I felt like God created me to do something different. I like building a business. I like the entrepreneurial feel of that startup. So decided to try to get into real estate. So I went back to doing home health physical therapy where I'm driving around to people's homes. That gave me a lot of flexibility and freedom to start real estate on the side as like a side hustle. So that was back in 2016 that I left that corporate job, kind of climbing the corporate ladder, go back to home health physical therapy. 2017, we flipped a single family home. 2018, we did a duplex. 2019, we did a few small multifamilies, like a 16 unit, 8 unit, 10 unit. 2020, in the beginning of 2021, sold all of those, put a bunch of money in our savings account so we could go all in. 2021, we started syndicating. We got 183 units that year, I think. Just did 195 unit in 2022. Went about 12 months without being able to do anything because interest rates were too high and prices were too high. And then we've just done a couple deals this year, one that we're going to talk about with some seller financing that was able to make those deals work. So we just syndicate apartments in Southwest Central Ohio.
Awesome. Well, that's amazing. And, you and I have been connected for several years now. So it's just awesome to see your growth.
No, thank you. Yeah, you as well. Whitney,
well, thank you. Awesome. Yeah. Well, let's dive in. We've got Elida 96 units in Elida, Ohio. You guys, that's a tongue twister. I had to practice before we got on the show, by the way. When did you close and what was the purchase price?
We closed 2 weeks ago. The purchase price was $7 million.
Awesome. Okay. So 2 weeks ago, that would have been last week of October, or second to last week of October.
Yep. Yep. Okay, yep. You got it.
22 million. Is that what you said?
No, 7 million.
7 million, not 22 million.
Not 22. No, I hope not.
Awesome. Okay. So when did you first find the deal? Like, how did you find it?
Yeah, it was neat. I said we've closed 2 this year. One we closed on at the end of May. So a few months ago, 6 months ago or whatever. That the guy we bought that property from, older gentleman kind of getting out of the game, and an older broker friend of his brought him this deal. And he said, you know what? Like, cause he sold us his last one that we bought 6 months ago. And he's like, look, this looks like a good deal, but I'm out of the game. So he called me. He said, Lee, I'd take this if I was, younger, but I'm not. So you should go buy this deal. And so I said, well, thanks. I'll go take a look at it. Probably not a good deal. There's no good deals out there right now. But it was another one because this guy, he had seller financed the property I bought from him. And as I looked into this seller was interested in seller financing too. And I really liked the property, liked the area. So I went, this actually might be a pretty good deal. So that's how we got it.
Awesome. Okay. So completely off market. Were there any other buyers that were taking a look at this?
I don't think so. It was not advertised. It was through a broker, but they hadn't advertised it. I think they were talking to a few other people about it, but I don't think it's kind of out there. I can explain that, but it's not even I wouldn't even call it a tertiary market. What comes after tertiary, Whitney? I don't know what that word is, but it's that. So there weren't a lot of people interested, but I've got some really, I'm within 2 hours of it. And I've got, we actually partnered with some guys up in that area that are investors and located in the area. So it made sense for me more than a lot of other people, even, other people in Ohio. So I don't think they had other offers, but it wasn't just shown to me, but it was kind of that off market pre-listing type thing.
So what was your thought when you took a look at this property as far as the overarching business plan?
Yeah, Whitney, sometimes I just try to be like really basic with real estate and say, is this a good property in a good area? And am I getting in at a good price? Is there value add? And I just felt like the answer to all those questions was yes. like I said, it's not a big city in Ohio. No one's heard of us here. So Elida is right next to Lima, and Lima's like 35,000 people, between 35 and 40,000 people. So, that's pretty small, but it's a good area. It's got good industry. It's diversified in the Lima area. And then Elida is like, that's the good school district. So it's close to this, decent size small city, but it's in a good school district. And then I really like the buildings. They're all brick buildings. They're actually all little ranch quads, built on slabs, just real easy to maintain. So I like the buildings. It's like this little dead end street off of kind of a quiet street. So very quiet, tree line. So nice setting, good area, good schools. And we were getting it at a good price. So just to me, good property, good area, getting it at a good price. I think if you do that in multifamily, you got a long-term outlook, you're going to do very well.
Awesome. Thanks for expanding on that. I'm curious to know, at what point in time did you walk the property? Was it like during, before you put in your letter of intent or wrote up the purchase sale agreement, or did you have to wait until afterwards?
No, it was before. It was before. They were fine with us going up there and talking to the on-site lady and the maintenance guy and kind of walking it. I am trying to remember back when we might have thrown an LOI out there before that. I don't think we had it really signed off on. I think we had said, yes, like we would do this price that you're looking for with all these, like if we don't find anything significant. So I think we probably had the LOI out and then we went and walked the property.
Awesome. Okay. So let's talk about, how did you structure that offer?
Yeah, like I said, they were telling us right away that the seller was up for seller financing. And so, for us, that was like, well, that's very interesting, because what does that mean? He was willing to finance the entire thing. So to allow us to put 20% down, just like he's the bank, put 20% down, and then he would finance 80% at 5% interest. So, at today's prices, it's really difficult to get deals done because, you're still buying. I mean, some deals are still trading at a 5 cap, but even if you're trading at a 6 cap, even if you're trading at a 7 cap, which, seems like that's got to be a great deal. Well, with interest rates at 8% and up, you're still negative leverage, even at a 7% cap rate. So, right. So with this guy willing to finance it at 5%, that's a game changer. So that's how we structured it was, and he has some debt. He owns a lot of property, this guy does. And it was a local lender. So we were able to get comfortable with that, with like the amount of debt he has on it, and the local lender, and they were involved in all that. So it just all felt very above board. And it was not our, but the title company I'm really comfortable working with, that was kind of handling the whole transaction and everything. So, because it's kind of tricky. It doesn't feel great. Like I feel a lot better if I just own the like I'm going to own the property outright and I just have a loan with the bank. That's not what this is like. So it's a different structure. It's like what we called it was a lease agreement with an option to purchase. So this seller maintains ownership, and it's like a 3-year deal. He maintains ownership for those 3 years, and he's like, it's almost like a master lease. Kind of, to me, like we get to operate it, do whatever we want with it, and then we can purchase it at any time at the agreed upon purchase price that we went in on that $7 million. So kind of tricky. Again, I really trust my attorney that I always work with at the title company, and I'm like, hey, this is all good, right? Like we're good, we're good here, we're protected. And he assured me it was. And in fact, he's like, Lee, I think the seller is the one that's really more at risk with the seller financing, not the buyer. So yeah, it's kind of confusing, Whitney. I don't know if you have any questions around that, but that's the best I can explain how it was structured.
Well, we recently recorded a show about how to purchase a property with a master lease.
Oh, good. There you go.
So it's really interesting that's becoming more of a viable strategy, especially in the market, especially with sellers who are ready to exit, right?
Yep. Yeah, I think Whitney, just real quick, if a seller still wants to get this price that they had in their mind, I mean, I think they know they can't sell for what they could have in 2021, but if they want to get anywhere close, they know to me, like it can't be traditional financing. So they're going to have to get creative if they want to get anywhere close to the price that they, were hoping for at one point.
So how long did you have for due diligence? How long did you have for close? And did you have, I would imagine you don't have any extensions in place with seller financing, but, please correct me if I'm wrong on that.
Yeah, it's kind of funny, Whitney, like, there's a lot of flexibility in it because there's no bank involved. And we didn't even really have the normal, like, sign the PSA, because there wasn't really a PSA, because we're not, doing like we're not like purchasing it really. And it just gets recorded differently. So we didn't have all these like hurdles, which is great. I mean, there was really nothing saying, so we kind of had this agreed upon date that we were closing. And they were like really pushing us. We had no hard money, which is my favorite part about the market today compared to where it was, the past few years, where we were always doing like hard money. So no hard money. And like, there weren't these like specific hurdles and due diligence period. It was kind of like just loose, which was nice, but also, I mean, I kind of like having a little bit of structure. So it was kind of odd as well. So they really wanted us to close quick. I mean, he kept telling us they wanted us to close in 30 days. And, that felt somewhat doable, although I'm not able to raise money like really quickly, like some people can. We've raised millions of dollars, but it always takes me, a few weeks to get our investors to get their money in. We're just not super fast at it. So that was very daunting to close in 30 days, but without the bank, it felt possible, because usually it's like we're all ready to close within 30 to 40 days. And then we sit around and wait on the bank for 2 to 3 weeks. So without having to do that, it was like, well, I think we can close pretty quick. So we kind of drug our feet to get through and actually kind of start our 30-day period. So we probably had more like 45, almost even maybe 50 days to close. And we were able to pull it off and get it done pretty quick. That's the fastest I've ever closed by far. I feel like, I don't know that I've ever closed in 60. The bank always makes us extend a week because they're finally doing their paperwork a week before closing.
Isn't that true?
Yes, it is for me.
Well, tell me, how did due diligence go? The physical due diligence.
Yeah, it went pretty well. We were pretty happy with the units. We definitely knew there was some CapEx. We had a pretty big CapEx budget. I think we had our CapEx budget at 575,000. In the brick buildings, all the roofs were new. They redid a bunch of concrete work. The drive, and that's, we're not maintaining that. The drive down by the properties was all good, but the driveways, the little driveways, and then the back parking lots were pretty bad. We had planned on all that. Those were a little bit worse than we thought the more we got into it. And then it's kind of hard to explain, but the entrance cable, the power line that goes from the meter box, the meter for each unit, because they're separately metered, so 4 meters for each building. And then there's like this big entrance cable that goes into the unit and then feeds the breaker box and then goes, all throughout the unit. Those were shot on half the buildings. That was not expected. And that was like a $40,000 thing. A couple foundations, most of them are on slab, but there were 4 on crawl spaces on block foundations. And some of those were shifted. So that was not expected. And then, like I said, the parking lots were a little bit worse. So we did ask for $100,000 off or credit at closing. And what we ended up doing was taking that off the purchase price. And he made us bring 100,000 less to closing.
Okay. So you originally went under contract for a different price and then retraded, to get.
So yeah, we were at 7.1 and we were going to have to bring 1.42 to closing. That came down to 7 million, bring 1.32 to closing.
Okay. Sounds good. And nothing else surprising on that front?
No, not really. No. Like I said, the main thing, if the exteriors are pretty good, like brick and, new shingle roofs, it's like, what are the, for the most part, it's just, what do the units look like? And we were pretty happy with those. Just, pretty good shape, and a lot of them need turn, but that's the plan, is to turn units.
Well, what about the financial due diligence? How did that go?
Oh yeah, that was pretty interesting. They kept telling us they were renting some of the 2-bed units for $900. So, I mean, that might sound cheap to people. The average at this property was $615. 75% of them are 2 beds, 25% are 1 beds. The 2 beds should be renting for $925. The 1 beds, $825, $850, somewhere in there. But they were way less than that, obviously, because the average is $615. So they kept telling us they were renting 2 beds for $900, but they kept sending us updated rent rolls and we kept not seeing them. So we finally did, get the leases, and we sold some 900s. But that was just, it was like, the marketing didn't quite fit the actual leases, but as we got into that and dug into the utilities and everything, they were pretty honest on everything. They were just like projecting some $900 rents they were getting, and I guess for the most part, they really did come in once we saw the leases. So nothing real incorrect, I would say, on the financials.
The records were pretty okay, pretty good.
Yeah. When they sent us the bills and stuff, yeah, it was in line with our underwriting and what we, we're getting from them at the beginning.
Now, before we get into, the deal structure here, a lot of the people that are listening to this, especially with the past 18 months and the Fed's hiking the interest rate, Fed fund rate, everybody's been nervous about interest rates, but one thing that can really throw off a property are taxes and insurance. Yeah. Do you have any issues with that on your underwriting and your due diligence?
No, I mean, we use the same insurance broker on all of our deals. So, we were able to engage him pretty early. And, and actually that's weird. That's another weird thing about this, Whitney, is that the previous seller financing deal we did, we went and got an insurance policy and put the seller on our policy as a what do they call it? Dual insured or additional insured. This time, the seller, he kept his insurance and added us as an additional insured. I think that helped us keep a pretty good rate. We're happy with the insurance. And then, another good thing about doing a seller finance deal that's like a lease agreement is that it really technically is not trading. So there's no sale price. We didn't sell. So taxes are going up everywhere. I mean, everybody's doing reassessments and raising taxes, but there's not a sale recorded here. So we don't, have as much risk of it, jumping big time. So in Ohio, 2023 was a reassessment year. So all of our properties are getting reassessed and going up 10, 15, 20%. Some people are getting more than that. So we're going to get that bump, but we're not, in danger of getting the double or triple because of our sale, because it didn't trade.
Interesting. Very interesting. Well, let's talk about how you structure the deal, right? Because you did mention that you brought in another partner here, and then you also have your limited partner. So let's talk about the junket partnership. How did you structure that?
We did 40% went, 60% went to us. That's threefold. We found the deal, we put it together, and then we're the asset managers on it. We're actually managing this one ourselves, so we'll be the property management, but that doesn't have anything to do with the GP. That's separate. We get a fee for that. So that's separate, but we're truly more the operators. And so we get 60% for that. And then 40% goes for raising the capital. Now, I know like technically you can't just give equity for raising capital. So they're doing other things. So their job is to raise half the capital. And they're the boots on the ground. They're the ones that know the contractors up in that area, the vendors, things like that. And they can be at the property more often than we can. So they're getting 20% for those things. And then we would get 80% for raising half the capital and operating the deal.
Very interesting. So how did you break this out with your limited partners that you brought in on the deal?
Yeah, we were able to do an 8% preferred return on this one. And then we did a 60-40 equity split on top of that. So the investors get 60, we get 40.
Okay, very good. And were there any other IR hurdles here that? No,
we don't. No, we don't do anything tricky like that or sophisticated. I shouldn't say tricky. That kind of has a negative connotation. I don't mean it that way. But no, nothing else sophisticated like that. Just real simple. They always get their 8%, and then anything on top of that, we'll split 60-40 the whole time.
Okay. And what kind of fees did you charge the deal?
We always do a 2% acquisition fee. And then there's no other fees. We don't do a refinance fee or what's the fee called when you sell on the back end or whatever.
Like a capital event fee or something like that.
Yeah. Nothing like that. And then we do a 2% asset management fee. That's it.
Okay. Excellent. Let's talk about like my two wrap-up questions. What was something that you found that was easy or you thought would be easy during this process that ended up being a little harder? And then let's flip that around. What did you think would be harder that actually ended up being easier?
Yeah, good question. I'll tell you not having a bank involved. I'm sure you have bankers listening, Whitney. I'm sorry, but they really gum up the process every time that I've been involved. It's difficult, and lending's tough right now. I mean, I feel bad for all of them. It's a tough scene out there right now. So I thought, man, this is going to be really easy. And the seller was laid back in some ways, but he just kept pushing us so hard to close. And without having like a PSA and having these timelines laid out, like it seemed like, well, this is going to be easy, like no hard money, nothing to worry about. Like I can, we got it. But I don't know. That's not really how he sounded. Like he kept pushing us, pushing us. Like, well, I don't know what you're pushing toward. Like we don't have any deadlines. There's no dates, but we're trying to be good buyers and trying to be good people to work with. And, this guy's reaching out to us with other stuff he owns that he wants to unload. So, it works out when you do that. So that was, it sounded great. Like, hey, no PSA and no deadlines and no hard money and all it, like we can just, take our time, but it did not end up being like that. He pushed really hard. And again, we're just, we always want to be good to work with. We want them to be happy that they sold us. Right. So we were trying to, go at their speed and all this without any deadline. So it's kind of annoying, but we got through that. And then what we thought was going to be hard, I guess I'll just say this was the first time that I ever partnered with anybody. We've never done that. We've never had another GP. So I'm just always nervous that, we're going to ruin a friendship or relationship. And because anytime money's involved, like, people are people and I don't know, money is a tricky thing. The Bible talks a lot about it. It's a major issue for people. And that was better than I thought. I mean, we just, these guys have been great. We've maintained our relationship. It's been good throughout. I mean, there was a little bit of, we decided in the beginning what percent goes to this and how much are they going to get? How much are we going to get? And it was a little sticky. They wanted a little bit more. I wanted them to have a little bit less. And but once we decided on that, it was really good ever since. And I'm really happy we partnered. It's fun. I like to have the abundance mentality, and there's enough deals out there for us to partner on some, and the pie is big enough to split between some different groups. And it's been a good experience partnering.
Awesome. Well, Lee, thank you so much for sharing your knowledge and experience with us here today. If people want to find out more about you and connect with you, how can they do so?
Yeah, I'm on LinkedIn and Facebook, mostly LinkedIn. So, look me up, Lee Yoder, on LinkedIn. And then we've got a website, Threefold. That's THREEFOLD. And then REI as in realestateinvesting.com. Got a lot of stuff on the website. So, check us out there.
Awesome. Well, Lee, again, thank you so much for joining with us today. We look forward to talking about your future deals.
Yeah, love to come back on. Thanks for having me, Whitney.